We've got some favorable economic indicators for the housing market coming up next. You're definitely going to want to watch this one. Big news in the financial world this past week as it relates to real estate. That's why we're here. We're talking about the market, sellers, buyers, what's going on and how to navigate it. And there's a lot of noise out there right now. So the first big piece of news is that we saw really favorable CPI data. That's the Consumer Price Index. That's the cost of consumer goods. It was down 0.1% in December, in line with economist expectations. And what this means is that inflation's easing a little bit, that the price of things are coming down. It's not accelerating at that high inflation rate we saw earlier in 2022 and at the end of 2021. So as a result, once this data came out, we saw the markets rally. We saw mortgage rates drop down a little bit, and we saw the NASDAQ and the Dow Jones increase. This is all good stuff because when the cost of money goes down, that means affordability increases for buyers, and for sellers, it means that buyers can potentially pay more for your home and get a lower mortgage rate. We saw rates dip below 6% last week, and today when we're filming this, we'll see what happens the rest of the week. So all very favorable news. We also got a really great jobs report, and that the unemployment rate is still very low in the 3 to 4% range. So all of this stuff is telling people that what the Fed has been doing is working, and the market's responding the way they want it to, and as a result, we saw mortgage rates drop down back into the 5s. So all really good news for buyers and for sellers. The last thing here to consider is that we have a Fed meeting coming up in February, and the Fed Market Watch tool, the CME Market Watch tool, that basically is a futures calculator on what the Fed will do at their next meeting, increase their expectations that we're going to see a 25 basis point increase, down from the 50 basis point increase at the last meeting, which is good. It means the Fed's pulling back their policy a little bit. It's now pegged at over a 94% likelihood, up from 74% prior to the CPI data, the Consumer Price Index, and the jobs report. So all this is telling me the Fed is going to be cooling their policy. A lot of economists are calling for the Fed to reset and realize what they've done is working, and we're seeing lagged data. So all this economic jargon aside, what does this mean for sellers and buyers? If I'm a buyer and I'm seeing a 5 as the first digit in my mortgage rate, I'm much more likely to pull the trigger than I was even at a 6.0% rate. It's a psychological thing, and if I'm a seller, I need to realize that and maybe move my time frame up. A lot of sellers want to wait until the grass is green. You're in that meat of the spring market, and given where inventories levels are right now, I'm clear that sellers should be accelerating their time frames because there's more buyers coming to the market than we anticipated in January and February because of this favorable economic data. I would move my time frame up while inventory is low and the neighbors don't have their homes listed. And if I'm a buyer, I don't want to be competing with all the people that are getting that nonsense advice to wait until after the Super Bowl or to wait until the spring, because rates have come down right now. My payment just went down on the same priced home if I'm a buyer. So this data is directly going to affect demand. And what the savvy sellers are doing is that with this higher demand and low supply, they're going to get their home on the market sooner. So buyers and sellers should be talking about moving their time frames up before we see things change as we get into the rest of 2023. So if you're thinking about moving, you've got to have a strategy session, a planning meeting, and sit down with a local expert and talk to whoever's going to be handling your financing as well, if that's in play for you, so you have a strategy to navigate all this data, all this Fed noise, because there's opportunity out there right now, and the savvy consumers are taking advantage. You're definitely going to want to watch this one.